Do, 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 do. See if I can get hooked up to YouTube myself. Here we go. All right. Got me. Hey, everybody. I can't hear you. You can hear me. This is a broadcast mini. Just me speaking. All right, let's see. Let me get the chart going here that I want to talk about. Share the screen. There we go. Afternoon, Bob. Afternoon, Dennis, Lori. Oh, I mean, we cover this crazy move down on S&P 500. That's what's up first. And then from there, we'll cover what you guys want to see. We'll talk about a couple trades I did. And yeah. So we get started about 3 minutes. Looks like I don't have any kind of fancy slide or fancy welcome or anything today. So welcome everybody. DEFCON 5. I don't know. Just depends on what you're expecting. And that was a nice big fast drop there. As you can see, those 3 big daily candles. And today we kind of arrested it. Hey, Kimberly's here, the boss. Hey, babe. All right, where did YouTube go? Headed up, and then it went away. There we go. All right. Hey, sometimes reference manuals, there's nothing better than paper. It's hard to keep your finger in 3 different places in a Kindle. Can't compare the figure on, can't compare figure 76 with table, 284, cross-reference it to the formula in the appendix B and see if you got the right information all in a Kindle. Like that's, you can't just go. I don't have multiple working Kindles. I probably have multiples, but not multiple working. Hey, L. Yeah, you guys can't even see all the books over here. I mean, it's like foundation, analysis, and design, aquatic chemistry, fluid power with applications, and engineering properties of soil, wastewater engineering. A lot of fascinating things. Foundation, yeah, foundation design, steel manuals, concrete manuals. So I'm back here in the library. But these books behind me, there's kind of fun stuff back here, like old Sears and Roebuck catalog. Anyway. Yeah, a little stone kitty too, right there. All right, it's 5 o'clock, so let's get started. Yeah, I read super slow actually. So I've got this new app called Speechify. It drives Kimberly crazy. She's like, if it can read that fast to you and you can comprehend it, why can't you read that fast? Anyway, it's like an AI reader. It reads way faster than me, way faster than I do. It's so boring. Hey, Diana. All right. So it's 30 minutes. Awesome. Let's get started. 5 o'clock. Welcome, everybody. If you're on YouTube, I'm going to try to keep an eye over there for questions. Everybody else, I think there's over 100 people in Zoom right now. So Zoom's where the party is, but YouTube is still where the party is. So I'm going to keep you up with that. If you have to leave early, get disconnected, whatever, you can go watch the replay on YouTube. So jeffreytrader.com/YouTube. Make sure you like and subscribe it, and for all the extra content that I put over there when I do. Anyway, so big news of the week. S&P 500 made a lower low, as did the NASDAQ, and the Russell caught up today, making a lower low itself. So crazy time, right? This was a possibility out there. That's why I had these fib lines that were hanging out down here. And it's not completely unexpected. It wasn't my primary expectation. I was kind of expecting this to take a move that way, but we broke down through it. So that didn't happen. Moving on to the new expectation. When presented with new facts and information, what are we looking at? Well, today we hit the 1618 extension of this whole kind of move up here. And if we run one more fib off of the low here to the high here, yeah, that also corresponds with a 1272 of that pullback. So this right here may be the low. Now, big event tomorrow, if you're unaware, whatever it's called, the Federal Open Market Committee, FOMC, is having their every 6 weeks meeting, and they're going to vote to raise the rate. What they've telegraphed and announced for weeks and weeks and months is a 0.25% increase in the Fed rate. That's the interest rate that the Fed sets. That's the Fed is not actually the government. They're kind of an independent quasi-government controlled entity, but they're not actually part of the federal government. If you look that up, the Federal Reserve is independent. So they're going to set their interest rate to try to control inflation or whatever they're going to do. Now, they've been leaking information through the Wall Street Journal. And yesterday, there was an article put out that kind of helped cause part of the flush into the close yesterday, that possibly we would see a 0.75% increase, or possibly even a 1% increase. Now, I don't know that that's actually going to happen, or if that was like hey, if we put this information out there and then we just stick with the 0.5, is it going to cause the market to rally? Now, after having 3 big down days, is that a way to step in and provide a support under the market without actually spending any money? I mean, they don't have to do any kind of QE. They don't have to do any QT. They don't have to, mess with the interest rates. They could just, keep them the same. Now, you may say, well, they got to fight inflation. Well, so they've already raised rates, and it takes 3 to 6 months for these actions to kick in. And they have a meeting every 6 weeks. So if you're doing something and it takes 3 to 6 months to even get an effect, initial effect out of that, and then in 6 weeks you evaluate it and say, hey, do we need to do that again? Or, how do you evaluate something that hasn't even had time to take effect yet? So I think by sitting on the rate, they could, they could keep it rate as is, no change, no rate raise, no rate, increase. And they're still fighting inflation, because what they already did is fighting the inflation. We just haven't gotten to the point where inflation is going to round off. So I discussed this with members of my Discord here a couple hours ago, And, mortgage rates already climbing. The housing, the housing cost rate was going like this. Now it's going to be, coming back down. There's a lot of side effects to raising rates. And the faster you raise them, the more devastating it's going to be to economic activity. Now, the stock market is not the economy. So try to separate that in your mind that all these economic disaster type events don't necessarily reflect what's going to happen in the stock market. So try to keep that in mind, try to keep it separate. They're correlated when they're correlated, they're not correlated when they're not correlated. And, correlation is not causation. So try to keep it in mind. I mean, the stock market is the value of the companies that are doing business and are listed as public companies. Excuse me. Kind of burp there a second. Sorry. So you've got companies that are public, that are listed, and our stock market is trading shares, based on their future earnings and value and, perceived, psychological, really it's all psychological. I mean, at the end of the day, it's only worth what somebody else is willing to pay you for a share of that company. If, time and time again has shown when companies like take Luckin Coffee, for example, when they came out and found, we found out that they were lying about their sales and numbers, the value of their shares plummeted. I mean, Lehman Brothers went out of business, when they got jammed up. So, I mean, time and time again, all of a sudden, nobody's willing to pay for a share of a company and they go practically to zero or to zero. So anyway, that's my high horse. So I feel like there's opportunity for the FOMC with Jerome Powell, to decide not to raise rates as much as that has been telegraphed. So they may stick to the 0.75. We'll see what happens. They may surprise us all and do a quarter point raise or a half point raise or a no point raise. And I think that could be super bullish for the market. And it would surprise a lot of people. Now, a lot of people are epically bearish right now. I mean, just epically bearish. I've heard more bearish sentiment than was even in COVID back 2 years ago. So S&P 500, like I said, looking at support in this area. Now, if we don't find support there, we can drop down to this 35, 94, 35, 80 area down here would be the next stop. So next area down, be down in this zone right here. If we don't hold in there. And it's just going to keep on, like we can stair step it on down all the way, to this 3180, 3200 area if we just kept on going. But at this point, I don't like this. This just doesn't seem likely. It's very overextended right now. At the minimum, we need a rally that comes back up near 4,000, I think, before we see another big leg down, if that's what's going to happen. But the market can always do what the market wants to do. It doesn't have to listen to me at all. Now, one of the interesting things, let's remove these up arrows off of this one because we didn't do that, obviously, on NQ either. Let's just clear everything for a second. Remove drawings. Let's check this out here. If we go out to a weekly chart, zoom this back up. You got the ads down here. I thought this was interesting here, is that this move right down here back in 2018, 2019 right there. And then this COVID drop right here. And we're actually bigger than the 2018, 2019 drop where we were freaking out about rates and stuff. So we can remove that one off. And we've actually, the pullback right now on NASDAQ is the exact same size as during COVID. So that's a market echo from the COVID pullback to now. And it's, starting to dwarf this one. It's 1272 times this pullback right here. on the NASDAQ. So that this area right in here has the opportunity to be support once again. And you see what happened when we found this low last time. We had this rally that lasted, a year and a half. If we did that again, that could take us up to 28,000, potentially 27, 28,000 on NASDAQ. So I just copied that, move it over. It could last out till into 2024. So anyway, that right there, just something to keep in mind. Now, we don't have to do that. We can go and return to the COVID lows. I mean, that we may do that. Just take back the whole last year and a half. Just make it all a big range. So that's the, on the NASDAQ, that's what I got that I'm seeing right now. On the, let's just clear this one too. Remove drawings, there we go. So this one's not quite the same right now. Like this drop on the S&P 500. Let's use the right tool here. That this pullback right here was a bit bigger than what we've had on the S&P 500 so far. Now I would have to pull all the way back down here to this 3,200 just to be an echo of that pullback we saw during COVID. Now, this was like panic, life ending. We all thought we were going to die kind of situation, and everything was going to go out of business, and we weren't going to have a society possibly. And that's not quite the situation we've got going on right at the moment. So that's why I see this pullback is probably not, I mean, sure, you can say that there's horrible things and blah, 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 but I just don't make the case for pulling all the way back down there. Now we could, but it just doesn't seem like that's the way it's going to happen. Maybe I'm wrong. This move right here, especially the last 3-4 trading days, very extended, very fast. And we need some relief rally in there. I mean, look at those gaps it left. S&P 500 does not like to leave big gaps without filling them. It'll come back and fill those eventually. It's not going to leave them open forever. So anyway, moving on down the path here. Russell made a lower low. Kind of put that arrow down here that we might see that. And it happened. Like we didn't break on up through there. We rejected off the 1272 extension and came right all the way back down. So that one has opportunity to start over again on a bullish count. Oil, still hanging in that resistance zone there. Tried to break through 1 day, 2 day, 3 day, 4 day, 5 days in a row now. Couldn't push higher. The range on today was over $7, which is pretty crazy for $120 oil to get a $7 move high to low. I think it's still set up for a pullback. We may or may not get it. And a breakout over the prior high, 130, sets us up to go to 150 or even as high as 200. Gold getting taken out to the woodshed just like everything else. Couldn't break back over that trend line. So ultimately that's bearish, and I expect this thing to get some continuation to the downside. Crypto, I know everybody kind of would love to hear my thoughts on crypto. Look at that. It's kind of hanging out right here at this cluster of fib lines that I had at the low 20s. And I expected to find support there. Now, if it, for some reason, can't find support there, the next zone down is around 16. Down here, where we start getting more fib lines lining up in kind of a dark cluster zone. Now this is, for the next several months here, we're into the crypto, what I'm calling the crypto winter. It's the pre-halving event for Bitcoin, and it should last through maybe September, October, where things aren't super interesting. We can kind of rally up and come back down again before we get into the 12 to 18 month period before the next halving event into 2024. So what are my thoughts regarding gold sinking? I mean, that was it. It broke the pattern to the low side, and right now the primary expectation is lower until it can prove otherwise. So all right, trades I did today. I bought a share of Tesla based on the fact that we made a higher low that was proportional, and we held this fib down here, and this, it was an echo that we held here, and then this littler move that we've had the past couple of days, we jumped down a time frame. There's a few more candles. Turn off the extended hours. This move right here was also an echo, and we started to bounce. So I bought one share. Now, why one share, not some sort of options? Well, the options prices are absolutely insane on Tesla, and this may take a while. Like, this could take a good long while for this to come back up here. And there's a split coming up. So there's a 3-for-1 split they announced. It's coming up. I don't know that the date's not even on here yet for when it's happening. Sometime in the next couple months, we've got a split coming up, 3-for-1, and it does something weird to options when you ride through a split. So I plan on holding this for a little while. 1,500 has been my kind of long-term target up here. So if I ride this from $600 up to $1,500, that's a pretty nice gain. And if I get 3 times the shares, that's even better. Now, the other trade that I was looking at today was NVIDIA. Some of you have been quite disappointed in the performance of NVIDIA. Well, it's come down here, kind of triple bottomed out right here, and based on this support around 151 and the potential for possibly a rally tomorrow at the FOMC, I picked up some shares around 158.20, I think it was, somewhere in that 158 price area there, looking for NVIDIA to come all the way back up. Let's see, remove that, draw a fib line. I'll get the request in just a few minutes. So it did have a lower low today. So if this thing does flip bullish from here, could look at a $432 target from 151. That's like a 300% gain just on a couple shares. So I bought like 2 shares just to see. All right, so it's like a $300 risk if it went to 0 tomorrow, or 300 and whatever, 300 change. And I'm just gonna sit on those for a little while. So that's what I got. Those are the 2 trades I jumped into today. All right, let's see, requests. Amazon, get your requests in, because it's gonna be, I'm gonna run out of time before I cover everybody's request. Amazon, I still expect them to pull down into this, potentially into the 80 zone. They have the pattern and the look that they're going to go back into this consolidation zone, at least test into it. And they had this consolidation that they did from September 2018 all the way through COVID. Kind of, we're in this zone, and then they broke out, and then they've come all the way back. And everything just looks like they're going to retest this zone in here. So I expect at least to drop below 100 and possibly down into this 80 price area. All right. Still the same, like nothing's changed there. Let's see. I see on. Yeah, so Ethereum US dollar. I can take that off of YouTube really quick. Stretch down to the extension of 2618. That's definitely where moves can terminate here. As we ran down the fib ladder, it got more and more likely we'd see a bounce. It's kind of hung out here for a number of 4-hour candles, and really it just kind of the last 2 days just hanging out in the zone here. It's got to get bullish now. The threats to Ethereum are the proof of stake. If they keep pushing that, I think we could see Ethereum's price keep eroding. So that's the threats to Ethereum right now. Let's see. I see next up JD. That just looks like a sloppy chart to me. Overall, big downtrend. Potentially trying to break through this downtrend of the highs. It poked up and then right back down, kind of sitting there today. So it needs some action there where it can get up through that. Let's see. Turn that off, turn those off. Turn those off. There we go. So finding some resistance at that 144 EMA and that downtrend of the highs. Hasn't been able to break through. All right, PDD, Pinduoduo. I pretty much hate Chinese companies. Like I've never come out great on a trade on Chinese companies, so I have a little bit of bias against them here. Looks like finding a little bit of resistance at this 144 EMA, and looks a lot like that last chart on JD. I've had a downtrend of the highs and just trying to break through it right now. So a move back up through, and these highs right there can start to flip this over and get it bullish. So back up above 70, say 75, and fill in that gap and keep it on going, not just bouncing back down. That can get bullish on PDD. All right. Let's see, DDD, 3D Systems. Yeah, kind of finding support here, retesting the 1272 extension. And it's got to get some bullish action. It's got to bounce and got to break back above these highs right here. And then it's got the 144 EMA coming down. That'll be resistance. If it can't get out of its own way, then you can see it move on down to the $6 area. All right, apps, APPS. That's where she stops, nobody knows. 5 could be the next. Watch, be careful on that one. We left some big gaps over here, so it could definitely come down. Market is not being kind. Anybody that doesn't make good money, and then you got declining projections, so that can be dangerous there. All right, XLF, financial. Yeah, so this one, and the thing to watch on this one is that we have earnings coming up in July. So this one could turn around and do a rally heading into earnings in July and then continue its downtrend. So it could get a little pop heading into July and then return on the downside. Now, some other ones I like, FAS is my more preferred way to play financials. So if at all you saw a couple, some green reversal in here, a nice doji and a reversal, and certainly a break back above this consolidation right over here around 90, which is a long way, 60 to 90, that's $30 already. You'd be rallying. But we tend to see a rally into earnings each time. And we saw it right there into earnings in April, and then it pulled back, and we've kind of been pulling back. And then just the expectation, you'll see money rotate into financials ahead of earnings. Now they don't hold it through the earnings. It just rotates. You get a rally heading into earnings each time. So that's what it goes back a long time. Each earnings cycle, we see this rally that happens in financials. All right. OXY. Yeah, so that one's pulling back. You know, the next target up is 101, but at this point, it may need to retest back to the 144 EMA. Like that's been just it's been trucking for all this year so far, and it may just need a break. All right. Yeah, I got the daily. BX. Let's see. See another one on YouTube. I'll grab that in a second. Yeah, so that right there, it looks like a downtrend of highs. Expect lower. Even if it bounces, it's got to break above that. Otherwise, going down. How far down? Well, it came up a long way, so it looks like 85 would be the next potential support right there. First big swing. It's finding, so if that was the first move down and this is the second move down, it's finding support there, but it could run to the 1272 extension, which lines up with that 382 retrace over there. I'm talking about, it's like this move down. And if you took and copied it and pasted it right off of here, that's where you get that red line. And that's right where it's bottom so far. Zoom back up and look at that. This first move down and this next move down, kind of bottom it out right there, retesting it. Slightly higher low so far. If it maintains that higher low, it can break out and go. All right. And who uses 4 hours? Well, I jump up and down the time frames because they're all self-similar in what I do. Like all the patterns are on the 5 minute, and then they combine together to make bigger patterns on the 15. They make bigger patterns on the 30, the 1 hour, the 4 hour, and the daily. And then all the way up to the weekly and the monthly, they all combine together. So if you don't have enough candles on the daily, jump down a time frame to the 4 hour to see if you can tell the story. All right. Is that LI? Is that Lee Auto? That looks like I don't know. That looks a little bit dangerous to me. Yeah. Got this downtrend going. I'd watch out for a rejection of that and a return back here to these lows one more time. Maintaining kind of a, get it flat, not downtrend. So it's kind of in a big consolidating watermelon squeeze, seed squeeze thing there. So watch out on that one. All right, big long list. Let's grab the one out of YouTube. NGRU, no, NRGU, RGU. And I mean, 3 times oil leveraged, you know, just watch out. You remember, if it's 3 times going up, it's also 3 times coming down. So if we get a pullback in oil, be careful on that one. We can come back from almost 600 to 400 very quickly. All right. See LOY. Yep, looks like it's heading down to probably do a roadmap touch again. It hit the second extension after touching the roadmap line back here. And looks like it's on its way back down here. It doesn't have to. It can find support at this consolidation. Can find support here and bounce and go. Or it could go sideways a little longer till everything catches up right in here. All right, BMY. Yeah, we're at 30 minutes already. All right, I'll keep going for a little bit longer. So I got 20 something messages and haven't caught up with. So BMY, that was the target right there. It looks like it's on the way down. And then Apple sure is getting close to that 123 target I was talking about. Got there a lot quicker too. In the neighborhood. You had this target over here. If I just scoot it over, we're almost there. So one more little push down and Apple can complete that pattern and flip bullish. So everybody thought I was crazy talking about 123 Apple. Like, there you go. It's in the neighborhood now. PNW, that looks like a tough pattern to figure out right there. Bounced off the 144 on the daily. Holding a trend channel. So it's either going to maintain the channel or break down to a lower low. Then TRV. Yeah, that one's man, it's kind of a flip point right there. It breaks below that, we're probably going to see lower lows. See, all these tails kind of came down right to that line that closed above it today. If we break down below that, it's probably going to go on down. And then F, been looking for lower prices, and it keeps on doing it. Looks like it's going to potentially come on down this $10 area. Couldn't bounce, didn't bounce, couldn't get these bounces. Hasn't been able to break above the high, the trend line, downtrend of the highs. So on down to 10 area would be the next expectation. All right, don't use 50. No, it's not a. I only use EMAs, and I use the 5, 13, 34, 144 EMAs. All right, PSX. Yeah, it broke out. Oh. It may come back and retest that breakout. Watch that. If it can hold that, then it could go. That's what I caution on PSX. A lot of times they'll break out, come back, retest the breakout. If the breakout fails, it'll go low. If it holds, it'll make a new high. All right. AMD. Yeah, that one rejected the 144 EMA there. Couldn't, it needs to stay above that line. If it breaks below that, then watch out for a move down in this target zone down here. So that's kind of like the line of the sand there across those prior lows. All right, EXP. Excuse me. Eagle Materials. That's not great. That right there shows it's probably going to make a extension lower. 109. My next guess there. LAN. Yeah, rejected that. So return to the, had a big consolidation in there. I'd like to see it hold a higher low, but that was only a three-way move up, so it may get continuation down. Let's see. Not great, not great. Yeah, so maybe looking to go to 256 area. Tomorrow, I'll just keep doing a few more. It's a bad day in the market, so help everybody out a little bit. Yeah, so didn't return the 144 there, so it may do it now, especially if oil pulls down. So just watch out. Oils get a little volatile. It can break down. DAL, that's just stuck in a range. Breaks lower than 29 and we'll see a lower low. I can't imagine it's as bad as during COVID, but you know, for Delta. But warning. All right, NIO. I don't know Oracle's ticker off the top of my head. I was expecting lower. It's kind of held this 1618. Let's see. Let's clear that back off. Put a new, I've updated the fib tool since then. Yeah, so if this one continues to stretch down to a lower low, be 890 area, will be the next one down. Oracle or, yeah, there we go. That one's on a path to go lower. So it popped a little bit. Let's see, did it make a three-wave move? Snap here. Snap on there. No, didn't quite get there. Kind of expect that one to come on down to 57. It's got the 144 above it here. If it comes up and tests that and bounces, come on down there. Otherwise, if it can break above that, it can get going positive again. So, all right, UNG, yeah, they got a big pullback today. A little bit of news. Still looking forward to the bounce back up. You know, just went back to the consolidation zone right in here. And may revisit the 144 EMA. Push just a little lower before it can get the next run higher. And natural gas is not like there's not more of it showing up. So you know, the next run would be right around 35 to 40 be the next target area. We came up and just scraped the bottom of the prior target area there. So just poked into it and rejected. So gotta build up strength one more time. All right. Boil. That's a natural gas pulling back. That's NG1 exclamation point. If you didn't know, that's what all these things are based off of, is natural gas. And there was a plant explosion last week, I think it was, back wherever it was here. And today the LNG facility, liquefied natural gas export facility, announced to be closed for 90 days with a partial reopen. So people are like, oh my gosh, price of natural gas is going to go down. No, not really. I mean, demand, you're going to tell me the demand's any different today than it was before the announcement? No. Price of gas is probably going up to 15 into next winter. So I'm just going to hold my natural gas position for now. So, all right. I do that in classes, Dennis. So I've got classes on FIB class. I think, let's see. Actually, I know how to find it. Hold on. It's right here. And links for stuff. FIB class right there. I know about my EMAs and FIBs right there. Pull that off of there. Right there. All right. And let's see. See ADM, Archer Daniels. I mean, That one's looking like it's going to come find this 144 EMA. It just has a little bit more to go, and then it could be a potential roadmap setup for a bigger bounce. I kind of predicted it back here. It's taking a little longer to get down there. And then we can get the bigger bounce. So that's still my expectation on ADM. All right. S bucks. I can do that one real quick. And it's been a downtrend. Yeah, look at them quick. I mean, it's not hard to look at a chart and say, geez, where's that going? I mean, got all these prior drawings on here, but that's when it broke the 144 EMA, it hadn't even been up there and tested it again. So, but you're telling me that Starbucks' outlook right now is as bad as it was during COVID? I mean, that's just a little crazy to me. You know, next support is at 64. You know, I don't know. Yeah, USO. Yeah, coming up to 94 resistance there. It can pull back to the 140. You know, all these oil things can pull back right now. So, all right. Yeah. No, I didn't do AMD because you know the chart's just. It looks like it's going to come to this target zone down here in the 70s. So I'm just not quite as bullish on that as NVIDIA had a larger Elliott wave pattern with support. You know, it did hit some of these targets and has the potential to go up, even though it did kind of make a lower low today. And it may ultimately hit 150. So just a little, you know, 2-share bite on NVIDIA so far. All right. So my next awesome thing that I got coming up, let's see. Let's just pull this over. Let's see. Let's go to a chart that's just kind of clear here. Next cool thing I got coming up. If you want to sign up for it, check out jeffreytrader.com/breakthrough. I'll throw it in the chat here. You go sign up. I've got another beta test opportunity coming up. And it's been some trades that were posted in Discord. Whether you knew it or not, that was kind of like the alpha test. Now we're going to move it onto a beta test with a closed group and move it off of public posting. So if you want to sign up to be some of the first ones to know about it, jeffreytrader.com/breakthrough. That's what I got today. No real slide pitch or anything like that. That's just a sign up and you'll be first and know about the information. Alrighty. It's going to wrap it up today. Thanks for coming. Gave you a little extra of the 30 minutes. Awesome. Appreciate everybody being with me today. Thanks for watching, everybody.